You're still tuned into Power Breakfast here on CNBC-TV18. We were just going through the global setup. So let's now talk about how all of those cues can impact our own markets, as well as some of the individual stocks that you should have on your radar ahead of the trading session. We have Mangalam, Vivek, as well as Surbhi joining us to take you through the trade setup this morning. Guys, a very good morning to all of you. And Vivek, let me come across to you first. We were going through the global picture. Of course, there's so much happening with the SBB fallout as well. But looks like, our own trade session will obviously definitely be dominated by that as well.
Well, you're absolutely right. It's all about the Silicon Valley Bank collapse and what exactly is the fallout, what is going to be the contagion effect, and what are the steps that the regulators are taking, to actually go ahead and contain this particular fallout. But, on the back of that, the global trade handover has been extremely weak. All U.S. indices have given a negative follow-on, effect as far as Friday's selling was concerned. Also, when you're talking about European markets, once again, quite a weak handover there as well. FTSE, in fact, falling almost 1.7%. Crude oil prices on the back of higher U.S. inventory buildup actually saw a bit of gain, 1.5% higher as far as Brent futures were concerned, and WTI futures up almost 1.3%. Now, coming to own Indian markets, actually what happened was that last week was a bit of an underperformance that continued, and the sectors that actually did well was the PSU utility space, the oil and gas space, as well as the capital goods space. But on the other hand, metals, IT services, and autos were significant laggards in the week gone by. So it requires to be seen whether this particular trend continues as well. And as you rightly mentioned, the SGX Nifty and the Asian markets, all of them take cues from the Silicon Valley Bank fallout, and that's going to be the key to watch out for today's trading session.
All right, Vivek, thanks a lot for bringing us all of those cues. But let's also talk about the individual stocks that could be in focus in today's trading session. Surbhi is here with that entire list. Good morning, Surbhi.
Hi, good morning. Thanks for that. So I have a few stocks that are on my radar today. Adani Group stocks will be in focus today as they prepay share-backed debt worth $2.5 billion ahead of its deadline, and also prepay $500 million taken for financing of Ambuja acquisition. Next is IndusInd Bank, where the RBI approves reappointment of Sumant Katpalia as MD and CEO for the bank for another 2 years. ICICI Bank, where RBI granted time till September 9th, 2024 to reduce its stake in ICICI Lombard General Insurance. Tech Mahindra, where the company appoints Mohit Joshi as MD and CEO for another 5 years, effective December 20, 2023. Godrej Properties, the company acquires 28 acres of land in Bangalore. Welspun Corp, where the company's subsidiary Welspun Metallics has approved multiple export orders for pig iron, which will be executed in another 2 months. And lastly, Nazara Tech, where two of its step-down subsidiaries, Kidopia and MediaWorks, hold cash balances at Silicon Valley Bank to the tune of 64 crores.
All right, Surbhi, thanks a lot for getting us all of those individual stocks. Finally, let's also talk about cues from the futures and options space. Mangalam joins in with that. Mangalam, very weak cues coming in after, what was already a weak session on Friday.
Yes, it was a weak session on Friday. No two ways about that, Pavitra. In fact, the Nifty has fallen below the 200-day moving average of 17,434. But importantly, now, we have held on to a couple of lows. Feb 1st, which is the budget day low of 17,353, something we'll be watching out for. Feb 28th, which was, last Monday, where the Nifty, after that, we rallied from 17,255. And on Friday itself, we bounced back a good 90 points from the lows of 17,324 itself. In that, the SGX Nifty has actually now moved off lows. It's down only about 36 odd points, 30 points as we speak, and that's primarily because there is a sharp surge in US futures as regulators have announced a bit of a backstop for SVB depositors itself. So to that extent, it will be very interesting to see whether we see some short covering today or not. Good news coming in on the Adani front, and crude oil prices being low too. In the cash market, the FI sold over 2,000 odd crores. In index futures, they sold 1,600 crores. They added about 11,000 shorts. And as a result of which, in just 4 trading sessions, from 26%, the FII longs have fallen all the way down to 16%. So shorts are back in the system. Not just that, the FIs have sold almost 2 lakh calls as well. That's twice the number of puts that they've sold. And if you just take a look at the calls that they've sold, 17,500 call, extremely active for a premium of 60 odd rupees. We have 17,400 call, extremely active for a premium of 100 odd rupees, telling you levels upwards of 7,500 could face some bit of resistance. But at the same time, put writers were active at 17,400 as well for a premium of 90 odd rupees, telling you that 17,310 to 17,320 could be a bit of a support. So to that extent, again, will the SGX Nifty dip be bought into or not? The put call ratio sub 0.9, closer to oversold levels, and at the same time, the Nifty Bank has its support at the 200-day exponential moving average, just a few hundred points below where it is right now, 40,080, important psychological support as well. Well, we have fallen. The SGX Nifty indicates a bit of a further decline, but how much of that is already in the price, and could we see some short covering or not is the big question.
That is the big question. So let's see how that plays out. Mangalam, thanks a lot for getting us all of those cues. We do need to get into a short break on that.